Appeal to India Finance Minister to clarify credit line guidelines for tourism. The request asks the Honorable Finance Minister of India to investigate the anomalies in the operational guidelines and FAQ. One of the clauses is inherently contradictory to the proposed spirit of the scheme, which is to help borrowers by assessing their accounts on a pre-pandemic status. Due to the second devastating wave of COVID-19, there is literally no domestic tourism business. The government extended the Emergency Credit Line Guarantee Scheme by another 3 months till June 30 and also widened its scope to new sectors, including hospitality, travel, and tourism. ECLGS 3.0 would involve extending credit of up to 40% of total credit outstanding across all lending institutions as of February 29, 2020, the Finance Ministry said in a statement. The tenor of loans granted under ECLGS 3.0 would be 6 years, including a moratorium period of 2 years. A request was made to the Honorable Finance Minister of India to investigate the anomalies in the operational guidelines and FAQ released by the National Credit Guarantee Trustee Company Limited (NCGTC), due to which the scheme itself is being nullified. Under borrower status, as per the scheme notification, Clause 1, 4 and 7 of the Operational Guidelines and FAQs number 8 and 109, the scheme proposes to extend support to tourism, travel, and hospitality accounts which were classified as regular, SMA 0, and SMA 1 and whose DPD, days past due, were not beyond 60 days as of February 29, 2020. However, Clause 19 of the Operational Guidelines mentions that the scheme will not be applicable to accounts classified as NPAs, as on date of sanction, disbursement. This clause is inherently contradictory to the proposed spirit of the scheme, which is to help borrowers by assessing their accounts on a pre-pandemic status. Due to the same, banks are not entertaining applications of the tourism industry stakeholders for availing the ECLGS 3.0 scheme benefit. All government data, whether that of GST or of income tax, repeatedly has highlighted and affirms that tourism, travel, and hospitality is the worst hit sector, and there has been negligible to nil business for the majority during the 13-month period since the time the pandemic struck. Thus, it was requested that the Finance Minister issue the necessary instructions to have Clause 19 of the Operational Guidelines issued by NCGTC to be immediately annulled, as it is sending a contradictory message to all MALIS member lending institutions. Due to the second wave of the pandemic, there is literally no domestic tourism business. This is on top of a complete shutdown of all other segments of tourism: inbound, outbound, corporate, and group tourism business. Without any business, it is practically impossible for tourism, travel, and hospitality entities to generate cash flows and to service interest. Addressal of these points is on an urgent basis, and a favorable and quick response will send a strong show of national support to the tourism, travel, and hospitality industries of India, which is reeling under its worst professional crisis. Rebuilding travel.